Hi there. Let's talk about the budget that was presented by the Union Finance Minister of India on Friday. Now, in India, budget is a very important event. At least so far, it has been a very important event because it sets the direction for the government's investment philosophy, how they want to manage the fiscal deficit, various macroeconomic parameters, and stimulate the industry. My take is that over the next few years, the importance of budget as an epoch making event is going to reduce. The Modi government, which has been sworn back into power, is going to make more and more interventions which are just not once in a year kind of interventions. Having said that, what's happened in this year's budget and what's in store for the Indian economy ahead? Let me summarize in a few crisp sentences and then we can get into details later on. So, the government wants to make India a $5 trillion economy by the time the next elections are due, which is by 2024. We are already on course to become a $3 trillion economy, and there is a lot of push towards making that happen. Other than that big picture, it's largely a back to basics kind of a budget with a lot of emphasis on process reforms, tax reforms, and infrastructure and investment being the two other big themes. So there's a lot of push towards infrastructure development. Bharatmala Phase 2 has been launched, which will further strengthen the road network. The NDA first government led by Atal Bihari Vajpayee, one of its pet projects was the Golden Quadrilateral, and we see the second Modi government also continue on that thread. India now has more than 100 small airports under the UDAN scheme. We are becoming the world's third largest aviation market. So the both road and air travel are going to get a lot of fillip with the budget. Secondly, shipping and inland waterways are going to get a lot of push. We'll see water being used more and more for transport, which will transform the cost of infrastructure development in the hinterland. And on the rail network also, there is for the first time talk of a private-public partnership. Don't be surprised to see a private company run one of the trains that you board soon. Affordable housing is going to get another push. Nearly 8 million affordable housing units have been sanctioned and most of them have been completed. Infrastructure financing will get a lot of boost. And also on the industrial development, MSMEs, mid and small enterprises are also getting a lot of boost. Let me read out a couple of points here. Interest subvention scheme has been increased. Payment platform, a social stock exchange, etc. Another big announcement was the reduction of income tax to 25% for companies having turnover below 400 crores, which covers 99.6% of the economy. So that's a big move, and it will encourage a lot of companies to, it will release some of their cash flows to be invested back into the business and grow the economy. So that's the right button that they pressed. Similarly, startup promotion, e-vehicles, etc. are means of pushing the industry agenda further. But there's no big bang announcement as such in terms of industry which is unleashing the market spirits. So today, India is the fastest growing major economy in the world. We were the 11th largest economy in 2014. Now, by this fiscal, we'll be the world's 6th largest economy. And our current account deficit has dropped from 5.6% down to 2.1%. The GDP is growing. Of course, there's a lot of debate on the GDP growth numbers and what goes into it. But we are going to look at a pretty healthy rate of at least 7% plus in the GDP. And FDI, India is attracting a lot of FDI. In this last fiscal year, we attracted 64 billion. 100% FDI is now going to be permitted in sectors like insurance intermediaries, and even insurance FDI is going to be hiked further. So broadly speaking, a lot of emphasis on process reforms like tax proposals, faceless e-assessment, making tax payment easier, tax audits easier, the whole banking and bankruptcy codes have been further strengthened. Um, I would say that GST is going to be further strengthened this year. Taxpayers having annual turnover less than 5 crores can just file quarterly returns. So basically, I don't want to get into the minutia of this, but the big picture is that there is no big picture here, other than reaching a $5 trillion economy and making the basics, the hygiene elements, really, really strong. And good thing to note is that key measures like whether it is a demonetization or a GST, they had pretty much nothing to do with the budget in a way in the past years. So we might expect a few bigger events, and this is not the end of it. Once again, to summarize, a lot of emphasis on physical and social infrastructure, digital India, pollution-free India, make in India, transportation, water management, and so on and so forth. What does this mean for the retail investor? Now, the retail investor, one minor tax concession has been given for housing related income tax relief. Other than that, there is no major announcement. The government may have an ace or two up its sleeve, but don't expect them to play the card right now. Expect it to be played, in the year before election. This is a government serious about reform and about politics as well, and frankly, both of them go together. P.V. Narasimha was able to launch India's biggest reforms in '91, because as a politician he led it from the front. So after the budget announcement on Friday, we have seen a sharp correction in the Indian stock markets between Monday and Tuesday. We had a fall of close to 800 points in Sensex. So what caused it? I would say three reasons here. One is that there was no big bang surprise announcement that the market would have cheered during the budget. That is number one. Number two is that, again, this may not be a cause, it's just that, the timing happened to be such that the budget announced that minimum public shareholding, should be at least 35% in companies. This means that promoters who are holding more than 65% have to reduce their shareholdings. So that could have led to some amount of selling, which impacted the prices. But most importantly, the index is today quite overpriced. We are looking at a Nifty PE which is still hovering in the 29% range, 29 times range. Compared to historical averages, it's clearly doing at least, I would say, 50-70% more than the averages. Earnings have not been really improving, and the markets were essentially looking for a reason to prick the momentum which the market had gained post elections and even in the run up to the election. So, should you start investing at this time? Yes, please keep buying on dips, but again, it's stock markets. You have to make sure that you invest as per your risk profile. Watch my other video on asset allocation to get my view on when you should invest more and when you should invest less. Happy investing.